Okay, let's start. Right, thanks for joining me. So, big day today. I'm lucky enough to be asked to host a webinar over the release of the CPI number, which is probably the biggest number of the month now. It used to be US non-farm payroll, but this is just obviously such an important number. I don't need to tell you why. I'm actually going to show you a trade that I've got at the moment, and this is a trade that you could, if you're interested, run over the CPI number because it's euro versus Aussie dollar. And of course, none of those I don't think should be massively impacted by the CPI number. We've got, let me try and show you here. So I've got nope, I don't need to go that far back. I do like to go way back, but this is enough. Okay, so if you take the peak of 2020 for the euro versus the Aussie, you can see we rocketed up and then reversed. That must have been the COVID outbreak. And then since then, the market trended lower. Now we've got a bit of a double bottom here, potentially. It looks like a double bottom to me. We got some long lower wicks on this is the weekly chart, on the weekly candles. So I'd be a bit happier if they were green candles, but they're red ones. But anyway, so we have got a break higher. Now there's two parts to this, because if that is a double bottom, then we're just breaking above the neckline. So that's actually quite bullish. But the problem is, for me, we've got a trend line joining the lows of 2021. So it is an important trend line. In fact, if I could really draw it like this. Take this low, join there. That's really the correct trend line, because it captures all three of the lows for 2021. So it is an important trend line. And then it captures the high just about here. What's that high? 153.97. The trend line's at 154.50. Okay, so certainly these two peaks that we had in 2022 this year held that trend line. So I think it is very important. And we've got the 100-week moving average. Now, these moving averages don't always hold to the pip, but when we look at the blue 100-week moving average over some time, well, when there has been some direction, it has acted as a good support level here. I think this is really the best place that we can look. Certainly acts as good support there throughout the whole of 2019, end of 2018, and the whole of 2019. A good support level, not so great when the market was trading sideways, but I could argue that it's been a good resistance level, at least over the last two times it was tested. We did manage to close just above the 100-week moving average at the beginning of the year, but then a big red candle brought us back below it, and of course then we plunged. And at the end of 2021, the 100-week moving average was a very good resistance area. So let's see if it does the job again. Now we have just had a little peak above. The value of the 100-week moving average is 154.93. We got up to 155.46. When you look at it on the weekly chart, of course, that's a very, very small margin of error, 50, 60 pips. We're trading at 154.82. So we've also got, when you take the swing high for this year, which is at 162.24, and you put some fibs on there, you get a 61.8% fib at 154.80, which ties in absolutely perfectly with the 100-week moving average and the trend line that I've just shown you. But then when you also take this, a more important set of fibs, really, which is that huge sort of parabolic swing high that we had in 2020, join it to the double bottom low we got in 2022, 2 years later, and we have a 23.6% fib at 155.21. Now we haven't managed to get near there yet, and I think the reason is because we've got these three shorter term important levels. So we're getting overbought on the weekly chart. We're only just getting overbought, but then the last time we got overbought, and it is a bear trend, we didn't last long in overbought territory. So again, we could reverse quite quickly. We could, and I don't know for sure. Well, we don't know if there's a double bottom. Of course, it all depends on whether we hold above this peak 153.97, which of course we are at the moment, but we haven't finished the week yet. Okay, I'm going into a lot of detail, but it is worth it. Now then, I have got the same trend lines on the daily chart, and it just is a little bit clearer. I've taken the point from here, but it doesn't matter. 500-week moving average is the green line. That's got a value of 154.93, so it's pretty much got almost exactly the same value as the 100-week moving average, which of course mathematically isn't a big surprise. Again, of course, the 500-day moving average doing a good job as of resistance. A couple of times in the past, I could argue that it was a good resistance level here as well, and I'm sure it was a good support level, just like because of course the value of it is close to the 100-week moving average. So again, same 61.8. So that I'm just showing you this because this has also got the 500-day moving average, but we have a candle here, which is I'm going to say that's a doji. So we did probe up yesterday, and I was short, and I did get stopped. But then after this candle, I thought, okay, this does indicate that maybe the run is coming to an end. So I've tried a shorter position again. I've got a stop just above the previous high, the previous day's high. So what are we today? Thursday. This would be Tuesday. Tuesday's high is 155.17. I think my stop's in at about 155.30. I mean, really, I should have my stop in above 154.55. What was yesterday's high? 154.46. So above 154.50 ideally, really. And it's still a low risk reward. Anyway, look, this is just an idea for you to kick things off. And as I say, it's lower risk than trading something like the dollar or gold or the stock markets just before the release of the CPI number. So I thought I'd kick off with that one. I'm going to use Fibonacci levels on the daily chart to give us some targets and see how that lines up with price action, trend lines, blah, blah, blah. Let's have a look at this with the first trend line I would put on there would be that one. Then I would put one from here. Oops, not like that. I would put one from here to, let's say, here. Would I? No, that doesn't capture the lows at all. So actually, probably what I want to do is that. Ugh, come on. I really want to catch the low of this candle. Can I do it? No, it's just going to take me along the 100-day moving average. So I'm going to have to try it with this one. No. Well, anyway, that's not quite what I'm looking for. But anyway, it gives us a rough idea of a trend line roughly around 154.00. So if we break below there, then we could be looking at something a bit more negative. Actually, do you know what? This is what you really need to look at. I'm just going to scrunch all these charts up and show you the 1 hour chart. I've got trend lines on the 1 hour chart already, and I want to show you them. Here we go. Okay, so this would kind of give you an idea of, let me just, nope, that's what I want to do. There's my trend line, 28th of September, nice trend line, really does capture these lows, and again, capturing the lows here. So what I need is a break below 154.40. That's that trend line that goes back to the 28th of September. So what's that, 3 weeks, should we call it? And it's touched the trend line, well, 1, 2, 3, at least this is the 4th test of it. So maybe the 5th test will break through it. And then, of course, we've got this little channel here, which, again, the lower trend line comes in around the same area, around 154.50, 154.40. So a break below 154.40 could signal the beginning of what I hope is a move to the downside. 100-hour moving average is at 154.17, and it's just creeping up slowly. So a break of that as well would, I think, confirm a move to the downside. Okay, so that's the 1 hour chart. And then we go back to the daily chart. And so then we've got fib levels, 152.50 would be the next target, on a break below 154.00, 153.73. What's that? That's it. Oh, that's just a little trend line that I've got there, joining these little peaks up there. So these are just levels to note. 153.75, let's say, break below there takes us down to 152.50. That would be nice, wouldn't it? That would be a couple of hundred pips if that trade worked. Okay, so just something that I wanted to start the day off with. If you've got any questions, obviously do shout them out. Now then, I'll talk about the inflation number. What is it we're looking for today? Is it 8.1? I think it is 8.1. So something like that. It's in the low 8. It's a low 8 number. I assume that if we get a high number, higher than expected, then stock markets go down, because it will, of course, just reinforce the message that the Fed is going to hike and keep hiking. And when they finish, they're also going to leave rates up there for a sustained period of time. I mean, I don't really understand why the market is even thinking that the Fed will pivot, because the Fed have been very, very clear in what they've said, and that is that rates are going up. They've given us a target, and they've said that rates will not come down next year. So I don't know, but the stock markets do seem to be holding up extremely well, and we will have a look at those. So I've actually got some positions on which I'm short a bit of gold, I'm short some stock markets, who are actually creeping back up to the levels that I got into them, actually. And I've just got a very small long dollar position through the New Zealand dollar. So I'm actually looking for a higher number, and I'm actually looking for a higher CPI number today, which I think will send gold down. Gold goes down whenever there's an indication of higher rates, more inflation, and stock market does too, of course. Higher rates are not good for the stock market. But yeah, I'm really surprised how things are holding up. I don't really understand it. The market participants or investors or whatever don't seem to be taking it very seriously, that interest rates are going to keep going up. Everyone seems to think that the Fed's going to be forced to pivot. And I see today the pound, we'll have a look at the pound, up a lot, 150 pips on the back of talk that the government is going to be forced to backtrack on their tax cuts. Right, we'll have a look at the pound in a minute. Okay, so look, I'm looking at gold here, one of my faves. I'll go back over it in case you haven't seen what I've talked about recently. But look, to me, this chart does look rather negative. I'm going to talk about something that I was shown on Twitter. I don't know. Yeah, someone was talking to me about a cup and handle. Now, I don't know whether this is the cup and handle that they're talking about, but it looks to me like the candle's been the handle has been broken, because this period here for this year has broken down below it. Now, if you know what this guy on Twitter was talking about, let me know. But I just don't see this as a cup and handle, because that would be the handle, and we've broken below the base of the handle. So to me, I could see the argument if we hadn't broken below it, but I can't see it. Now then, for me, what I'm looking at here on the monthly chart is the double top pattern. On the monthly chart, you can see we've got a fairly long lower wick on the first candle with a small red body, so that's the doji. Then we've got this kind of shooting star thing on the second candle, which indicated to me the fact that the double top was in place, and of course we've gone down every month since. Not a surprise. Now the double top pattern is only confirmed when you get a break of the neckline, which is the low point in between the two peaks of the double top. That was at 1676. Now we did break it, and of course we've revisited it. We're just let me have a look at the weekly chart. There we go. This to me is really important, and we've been dithering around this area. I thought once we'd broken, we'd really sink. 38.2% fib when you take the low from the end of 2015. I'll just show you that swing low, a real decent swing low. Of course, we really had come down, so it's an important point up to the double top. Now you get a 38.2% fib at 1678, which tied in perfectly initially with the 200-week moving average, the red line here. So when we broke down and then retested it 2 weeks ago, here, let me just open that up a bit for you. Break, retest. I thought, there you go, that's nice. Get the market does this, doesn't it, quite regularly? Little retest for us to jump into a short position, and then boom, down we went to 1613. Now this massive spike up, which I didn't expect at all, was the result of a reaction to the Bank of England stepping in to save the gilt market from an utter collapse, and pension funds, 90% of pension funds going bust. So I don't quite understand why gold made that reaction, if I'm honest. I suppose liquidity, whatever. Now there were some really good levels to trade. Actually, that was a good resistance up at 1725, 1730. If any of my subscribers are tuned in, you'll know that we were selling that level. Now, for me, I'll show you on the shorter term charts why 1700 is a level, but holding below 1675, 1680 should be negative for that reason. And it's also really nice swing lows down here for 2021, 1676, 1677, 84. I could actually do a little trend line here, couldn't I? Boom, join them up. Okay, well, the trend line runs perfectly along the 38.2% fib, but you can see 1, 2, 3, 4 points, even maybe 5 points, I could argue, for that trend line. But now we seem to be hovering around it, which is getting frustrating because we don't really know which direction it's going to go. So I've placed my bets on the market eventually breaking lower purely because we've got this double top. Now, when I go to the daily chart, what do I need to show you? Yeah, okay, it's all fibs again. This is why I had 25.30 as a resistance and it held. And then I've got well, anyway, look, these fibs here, sort of 1683, 1687 tie in with what I'm seeing on the weekly chart. Now that has held. A couple of days ago, we got to 1683. Today we've got to 1682 and change. So those levels do seem to be holding. And I do think it's obvious that gold is in a bear trend for the whole of this year so far. So I'm sticking with the trend. But I'm going to need that high CPI number to help me out with that today. What have we got? We've got 13 minutes until that is released. If anyone gets it, will you just print it out for me on the chat? So what else do I want to show you? Well, we might as well have a look at the dollar index, seeing as that's going to be significantly impacted by today's number. We're certainly in a bull trend. When we have pulled back, we haven't pulled back to any particularly significant support levels. We haven't even got to them. I mean, 108, 109.00, 108.50 would have been a really good support level, but we didn't get down that far. Last week we got down to 110.05 and shot straight up again. So clearly the buyers are very keen to jump in. In fact, look at this. We've only, on the weekly chart, we're only just getting a moving average crossover now. 100 about to cross over the 200 week moving average. I mean, I could argue this is only the beginning of the bull trend. I don't know. Let's have a look what's happened in the past. Well, certainly when these two crossed over, but we'd only been going sideways. Okay, well, I'm not going to go into that in too much detail, but let's have a look at the daily chart. So daily chart, we're clearly in a bull trend, 50-day moving average doing a good job of support, very good job of support. We never got anywhere near it on the last pullback, really. We would have had to have got to 109.00. We bottomed out at 110.00, of course, and we pulled back up. So we're just waiting now for the number to be released. But if it's a strong CPI number, then I guess the dollar will push up towards the previous high of 114.78. I don't see any reason why that is a resistance level particularly. We'll have to look at the monthly chart to just check that. So I could put some fibs going all the way back to 1980. Look, let's just see, are there any big fib levels out there that I need to know about? Well, the 50% fib is at 117.70. So we have got another 300 pips on the up. We've got 500 pips on the upside to test that. Then we clearly are running into resistance around 118.00, 120.00. So that could be interesting if we do shoot up. But I don't see any reason. Yeah, you know, there's every chance that we can move up to that area from what I can see. Certainly on the monthly chart. We go back to the weekly chart. I wouldn't fight this trend myself. Yeah, we're getting overbought on the weekly chart as well. Why have I got a trend line down there on my stochastic? Just take that off. But I'm not seeing anything. You know, there's no particularly negative candles on the weekly chart. In fact, if anything, this is quite a bullish candle with that long lower wick and the green body. So we'll just have to see what happens in about 10 minutes time. What else do I want to look at? We better look at some stock markets before the number. So this is the S&P, which is really languishing near the lows. If you're optimistic and if you're a bull, you can argue that maybe this is a double bottom pattern, and we are holding on to a support level that is important. Now, the other two, the Dow Jones and the Nasdaq, have actually broken lower, but we are testing, and I'm sure you know this already if you're following the stock markets. It's no secret that the S&P is testing the 200-week moving average, and there's a lot of trend lines and other things going on there. So if I go all the way back to 2009, which is the global financial crisis low, of course, we've broken below the 23.6% fib. We've broken below the previous low earlier in the year. We didn't get as far as the 200-day moving average. Now, where is this trend line that I want to show you? This one here. That goes all the way back. This is a big trend line. That goes all the way back to 2011, joining the peak of 2011, the peak of 2014, 2015, and then it just shoots through. And I've kept it on there because although it didn't have a great effect here, it did hold the downside at the end of 2020. So I think the trend line is still relevant. So I've left it on there. And of course, well, I can argue that it is holding at the moment, coupled with the 200-week moving average. So there is no question that is a very important area, and the CPI number is going to probably decide today whether that is a low and we push up, which I won't be happy about because I'm going to lose money, or whether we break down below it. Now, the previous low is 35.71. We're not a million miles away from there, are we? We're almost exactly 50 points away, which really isn't much. What is it? 1.5% maybe? So we are really at a very crucial level, at a very crucial time for the US stock market. So the S&P, we'll see what happens to that today. Now, if you look at the NASDAQ and the Dow Jones, they already look pretty negative. Here we go. Now, the NASDAQ, which has obviously been weaker, the technology index has been hit harder than the S&P. We've already broken below the 200-week moving average, and we've been below there for the whole of this week. We closed below it last week, even though we tried to recover. We're below it, and we're actually very near the lows. What are we now? 10,917. So we're only 150 points off the low of the week. So it's really not much of a recovery. It seems like the downside has just been halted for now while we're waiting for the CPI number, but you'd have to be very brave, I think, to be long going into that number based on this chart anyway. Now, we do have the 38.2% fib. Again, when you go all the way back to 2009 crash low, around 10,700, 10,700, that's the fib support, and it is holding at the moment. But the thing is, I can't find another trend line or anything else, a moving average or anything else to back it up. Let me just have a look. I should probably put some trend lines on here. I haven't done that. Yeah, look, we've broken that trend line going back to 2015. This trend line here won't be of much use, but I should stick it on there really. There we go. If anything, that gives us a potential target, doesn't it, really? Around, 8900, 8500 could actually be a reasonable target if we really are to collapse. And maybe an area where you would want to start buying. I don't know, but so that trend line ties in quite nicely with the fib levels that I've got on there. What else have I got? It's interesting, isn't it, that we're not even anywhere near the 2020 high, or the 2020 high that we set before COVID hit the markets. And I just remember thinking back at that time, wow, the markets really are high. We are going to have a big collapse to the downside. When you look at it and you bear in mind that there's a pandemic that we'd never experienced, but really it wasn't that severe. I guess we did drop about 30%, but of course, look at what we've done since. I mean, that is insane. That really is absolutely bonkers. A real parabolic move. Of course, we've retraced nearly 61.8% of it, but that really just was totally insane. All that printed money, it's amazing what it does, isn't it? That QE was just off the scale, and it drove everything through the roof. Okay, so for me, the NASDAQ doesn't look that positive, and we would really need to close the week. Well, certainly, what's this previous low is at 11,036. We're not too far away from there. We're 100 pips away from 100 ticks away from there at the moment. 11,225 is your 200-week moving average value. So we definitely would need to close the week above there for me to start thinking, okay, maybe we can get a good recovery. On the daily chart for the NASDAQ, nothing indicating to me that we've got a rebound on the way. We're just getting into oversold territory. And you don't spend too long in oversold territory. Let me show you. When you're in a bull market, as we have been up until the beginning of this year, you get into oversold territory, doesn't last long. Sometimes you don't even get into oversold territory, but really when you do, you bounce off real quick. Look, probably the whole of 2021. Let's just have a look at it out of interest. There's the whole of 2021. We really didn't spend much time below that 20 value line for the slow stochastic. It really, if all you did was buy the index every time it went below 20, you did pretty well last year, didn't you? You'd have bought it 1, 2, 3, 4, maybe even 5 times and done extremely well. But it ain't such a good indicator when you are in a bear trend, because just like, I'm sure you know all this. This is all fairly basic, but just like you spend a long time in overbought territory for the slow stochastic or RSI or whatever oscillator you might have on your chart, you spend a long time in overbought territory when you're in a bull trend. Well, in the same way, you spend a lot of time in oversold territory when you are in a bear trend and you're heading down. And you don't spend a lot of time in overbought territory. Look, if you'd have sold it when we got overbought here and here, you'd have done all right, wouldn't you? And we didn't quite get overbought when we bounced back earlier in the month, and now we're down again. So we are 4 minutes from the release of the number. What else can I show you? DAX has had a really good bounce back. I don't really understand this. I don't really understand why the DAX is doing quite so well in holding up, because really Germany just looks like a complete mess to me, very heavily impacted by the whole energy issue, and housing market's taking a tumble, and blah, blah, blah. Really doesn't look in a good state, Germany at all. But the stock market's actually holding up quite well. So let's put some trend lines on there. There we go. So we are clearly in a bear trend. There's absolutely no question of that. Little double top there, of course. So we are in a bear trend, and I wouldn't really want to be long. I mean, this could be a bullish engulfing candle, could it? Just about, if the CPI number doesn't push the stock markets lower. But you know, I don't see any reason to be long the DAX in that trend. Again, weekly chart, what is it showing? Oh, okay, we have actually got the 500 week moving average. So that's a big one. 11,760 is the value for the December future for the DAX 40 contract. So watch that one today. We're a good 600 points above that. So that's not too big an issue. I don't think we're going to test that today. It would have to be a diabolical number, CPI number, for us to test that today. But I could actually, and I probably should, put some fibs all the way going back to the technology crash, the internet crash, whatever you want to call it. And that would give us, that would actually give us 12,965 as your 23.6% fib. And of course, we're well below that, The next one will be 10,905 for that one. So anyway, look, if you're interested in the DAX, keep an eye on the 11,760 area. Break below there is not going to be good news for the DAX. And actually, I'm a bit short of the DAX, so I hope that does break. What else can I show you? I suppose we should have a quick look at the euro, seeing as it is the biggest currency in the weighted currency in the dollar index. We've got 2 minutes to go. Actually, I probably should get Twitter up on the screen. That's the best way for me to see what, where are we now? Twitter. See what the number is. I'll put it over here. I can just keep an eye on it. Or if you get it, maybe you could type it out for me. There we go. I probably do have a news service on this platform. It is a really good platform. It's Thomson Reuters, but I don't know how to get the news up on here. I haven't done that for a while. Okay. So again, euro not looking good as far as the bulls are concerned. It's looking pretty negative. We've got that's the weekly chart. So not good last week. Of course, we had a spike up, couldn't hold it, back down again. So very much bears in control of this, which isn't a surprise after we looked at the dollar index, which here we go. We've got a number out. It looks like it must be a bad one, because I think stocks are going down. Anyone see the number? I've got gold. What have we got now? Where's gold? Gold's down at 1657. The DAX has dropped 200 points. So yeah, it must be a bad number. What have we got? Anyone got the number? Trying to look on Twitter. Plus 0.4%. The consensus was plus 0.3. US CPI ex food and energy plus 0.6, expecting plus 0.4. So it's just not good, is it? 8.2% forecast was 8.1% previous, 8.3. So it's clear that inflation is not going down. I think that's fairly safe to say. I've got several accounts, but one of them is a small one, and that's up 500 quid. Okay, that's good. That's actually an account I'm trading for a friend of mine, so I'm glad I've made her a little bit of money. 500 quid, that's all right. I've actually got a funded trader account as well. So I'm just going to check that. That's up 20 grand, but that's a £400,000 account, so I'm quite relieved of that. That's good. Okay, well, look, sorry, well, I'm just checking. I've got another account which is up 1,800 quid, so that's actually my own money, so that's quite nice. All right, we'll have a quick look at gold and see how that's reacted. I think my stock markets are delayed on this platform. I haven't got live data on that. I've just got live data on the currencies and gold. So let's have a look at gold. Okay, so that's turned around really nicely. Bearish engulfing candle, it looks like today, so that just helps shorts, and unfortunately I'm short. So look, if we get down below 1659, and we're getting down there now, that should be a break to the downside, which would just continue that bear trend. Euro-Aussie, that broke up. Okay, DAX is down now around 12,000, so we could be headed towards that 11,750 area. That could be quite interesting. The dollar's pushed up against the yen quite significantly. Now look, I'm going to show you something in the dollar yen, which is quite interesting. Sorry, just checking my positions as I talk to you. Okay, so the dollar yen. I'm going to show you something. Now, of course, it's pushing up. We're seeing dollar strength, unsurprisingly. Euro is now down 65 pips. New Zealand dollar, which I'm short, fortunately, is down 74 pips. It's the only long dollar position I had. For some reason, I just felt being short the New Zealand dollar was the one. But the Aussie dollar is also down 79 pips, so either of those would have worked. Yeah, Aussie really weak. It's weak against the yen as well. The Aussie yen is down 90 pips. Wow. So Aussie really getting a battering. Right, what did I want to show you? Okay, even the pound has now come off against the dollar, despite being up at 112.94. What did I want to show you? Oh, yes, I wanted to show you dollar yen. Have I got that on the screen? Yes, I have. Okay, so, right, the dollar yen, obviously in a very, very strong bull trend, no question about that. I would be worried about being long dollar yen because you just don't know when the Bank of Japan are going to step in. And they've made some noises saying that they're aware that the market has, is stronger again this week, broken the previous high, which is where they intervened. So it would be interesting to see where they fancy intervening again. But look, I don't know whether this, I've taken my fibs from this huge swing high here, which is a 1985, is it? Yeah, 1985. I've taken it from there really because look, that's where the market just absolutely fell off a cliff and plunged down to just below 120. So blimey, that was 143 points in what? I don't know what triggered that. Does anyone know? 143 points in 3 years. That's a catastrophic move. So that's why I've taken my fibs from there. Now, maybe I should have taken them from up here, but when you take them from there, you get a 38.2% fib at 147.00. Well, 147.08 is the exact price. And look, the peak in 1998, that was at 147.63. 147.63. Yeah, the previous peak was 147.70, 146.75. Okay, so I'm going to say that 147.10, 147.60 is a big resistance level from the fibs, going all the way back to 1985 and going all the way back to the peak of 1998. Now we're right bang on it, 147.33 as I talk, as I speak. I'll go back to the weekly chart. I don't think there's any moving averages or anything on there. No, of course, all the moving averages look pretty positive. We've had some crossovers and everything else. But you've got to wonder, I mean, this really is getting quite parabolic. And surely the Bank of Japan has got to do something about that. If they're serious, then this is their opportunity. And, central banks do actually, well, I believe that central banks do actually look at charts and stuff. So that could be interesting to see if this is the time when they decide to jump in. Now then, that would be to their advantage because surely there are other people out there that know that this is a longer term resistance level. So I do wonder whether it's worth being short the dollar yen up here on that basis. Yeah, I wonder if the Bank of Japan will step in before the end of the day even. I wonder. That would be interesting. So that's it. What else? Anyone want me to look at something, especially just after that CPI numbers come out? I can't look at the stock markets because I do have delayed data on those contracts. I don't obviously need the live data. I don't need to pay for the live data because I've got it all on my trading platform. And I've got about 3 MT4 accounts. So it's quite easy for me to keep up to date with what's going on the live markets, which I'm just looking at now. Okay, what else? I better look at something. Actually, you know what? Let's look at crypto. I don't often do that here, but let's have a look at Bitcoin. Now, this is just dreadful. Going down, 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 down. If you follow me, especially my posts that I do put on FX Street from time to time, then you will know that I've been a bear since the beginning of November or middle of November last year. Just want to quickly do something here. That's what I want to do. There's the weekly chart. Down we go. There's just nothing bullish for Bitcoin at all. I'm sorry to say if you are long, but really nothing. Look, that was, I talked about this last month, that I said that was probably a bear flag and that we'd retested the bear flag and the 200-week moving average and the 38.2% fib. And I suggested that we would probably sink. It's been a slow process because we've mostly gone sideways, but we are sinking again now. Looks like that CPI number has given crypto a bit of a bashing as well. Yeah, it has. Not a surprise, is it really? Big red candle today for Bitcoin as we come down from the 50-day moving average. The 100-day moving average worked as resistance on a couple of tests in August and September. Really nothing at all bullish for crypto, really nothing. 50-day moving average kissing the 100 and then turning around. So that rally was never going to last too long. Ugh, it just doesn't look good. So what do we look for now? 17,588 is the low for the crypto crash for Bitcoin at least. And a break below that would obviously not be good. I'm just looking at the DAX, 12,100. Actually doesn't come off that much, but surely that is just indicating that the trend will continue to be negative, I would have thought. Just having a quick look through the markets. Gold pretty stable now around 1657. German DAX holding around 12,100. The euro has sunk. Dollar yen still around 147.30. Yeah, actually, where did the S&P go? Just let me have a look. 35.13. Oof, that really has been battered. So there's no question that the S&P, now you can't see this on here because it's not updated yet, but the S&P is at 35.13. Oof, absolutely battered. I should have been short the S&P instead of the DAX, really. I don't know why the DAX is holding up so well. But yeah, there is no question now that 200-week moving average has been broken. That is well and truly broken around 3,600, 35.90, 35.98. Okay, so that's it. I think it's all over for the US stock markets. I think that we've just started the next leg lower in the US stock markets, and we really could accelerate to the downside now. This is gonna get ugly, I think. Don't quite, I really wish the DAX wasn't holding up quite so well, but maybe it will follow through to the downside. I'm just gonna have a quick look at the DAX. Yeah, so we're trading around 12,100. So we're only trading around the low of the week, actually, for some reason. That is frustrating to me. I've gone to pick the wrong market to sell, and the reason I sold it was because I thought it was holding up too much, but it's still holding up too much. Anyway, there you go. So I don't get it right all the time, but at least I've got it right today, so that's quite satisfying. What else do I want to look at? Well, we'll have a quick look at the euro and the dollar index, actually, shall we? Because we had a look at it before the number. So the euro, yeah, bearish engulfing candle. Dollar index. Why is that not updating? Surely we must be doing better than 12.80. So the dollar really had the dollar 12.90. Oh, okay. The dollar hasn't really reacted very much, which I don't quite understand because the euro's off 50 pips. That can't be updated. Oh, there we go. 113 took a while for it to update. That was weird. Okay. So yeah, dollar index has pushed higher, well off the low. A couple of candles there with long lower wicks and green bodies. So we're just making some progress to the upside, and we have got to 113.38. So that makes a lot more sense. Okay, just having a look. Yeah, gold trickling lower now. Oh yeah, my US stock markets have updated now. So let's just have a quick look at that. S&P. Might as well see what it looks like on that weekly chart. As you can see, broken the low. We're not actually quite caught up with where the market is right now, but big red candle busting straight through the previous lows of 35.95, 35.71 and 35.98 200-week moving average. I think that this is pretty awful, and I just think we have quite a lot to the downside. I mean, there must be a lot of stops below sort of 135, sorry, below 35.60 today that have been triggered on that number. Yeah, gold now down at 1653. So I think that's it. I think we now know where the market's going to be going for the next few days. Stock market's heading south, gold heading south. Watch gold at 1613. That was the previous low. And I don't really know why it held there. I can't see any reason why it did. So I don't think it will hold the second time. Look, well, it reversed on that Bank of England action, if I remember correctly, but I don't see it as a level that I particularly would have expected it to bounce from. So the fact that it was sort of almost artificial, yeah, there's just nothing, there's no trend line, nothing, moving average, fib, previous price action, there's just nothing that I can see that explains why 1613 was the low last time. So I got a feeling we'll retest that and eventually break it. I don't really see the point in owning gold. There we go. Stock market, S&P now is caught up with where we are. The S&P is around 35.06. We've been down to 34.96. So yeah, definitely the trend will remain to the downside there, I think. All right, I think that's it. Questions, anyone? If you want to know, you probably all know who I am. You probably all follow me on FX Street. But if you don't, I'm just going to quickly show you my website, which is daytradeideas.co.uk. That's my at Daytrade Signals is my Twitter as well. I don't know if you can see that. I think I'm sharing the right screen. daytradeideas.co.uk. You can actually book a free mentor session with me if you want to. If you go to the website, you want to have a chat with me. It'd be nice to have a talk with you. There's my course. This daily analysis and signals is where you can subscribe if you want to get my analysis and trade ideas and calls and everything else. And you'd have done quite well this week if you'd have followed me. If you were brave enough to run positions over the CPI number, but happily, yeah, everything's turned out all right there. I've got this £400,000 funded trader account which I took on for a bit of fun. So I'm only up 10,000 on that. I've got to make another 30,000 on it, but today's certainly been a big help. So I think I'm just going to run these positions: short gold, short DAX. I think I'm just going to run these positions now. I'm long the dollar. I'm short the New Zealand dollar versus the US dollar. And I think I'm just going to run these and see if I can get another 10 grand out of those, then I will be halfway to my target within the first 2 weeks. So that would be all right, wouldn't it? I'll let you know next month how I got on. Don't forget to ask me. Thanks, guys. Hope that was helpful. It was fun. Well, that wouldn't have been much fun if the CPI number came in weak. That wouldn't have been much fun for me at all.